Good evening, all. It's Sunday night. Hope you had a great weekend. This is our weekly newsletter, ShogunTrading.com. This is Shay Horowitz. This chart of Citigroup on a 60-minute basis basically tells the story of the last week or two. Basically, the stock was left for dead. It was below $1. We talked of nationalization. They were talking about Citibank going away, and then all of a sudden, the everything changed, and the stock went from $1 up to $4 because the value increased so much. This is a direct reflection of two things. First of all, reaction to the administration and their steps. This is not based on economy. Our economy did not change. The value of the company did not change, did not quadruple in a week. That's not why it is. So it's view of what the administration is doing, one, or how that's going to affect Citibank. And second, it's traders. What are traders doing? Now, over the past couple of weeks, we've had a very, very strange trend. I'm going to go back to the S&P 500 now. And this is a very interesting chart. We broke the 800 level over here, and then we had very nice waves down. Waves down. That was between February 12th and March 6th. Right around here, we broke this channel, and we started doing this. Now, this is abnormal action for the market. The reason why it's abnormal action for the market is because the market usually has waves. The market usually does not do this. What we saw in the last couple of weeks is very, very strange trading. We saw every time that stocks pulled back even a little bit, they were bought. The reason why is because sellers were not around. Nobody wanted to sell. Buyers, people that were long stocks, people that actually owned stocks did not want to sell because the market was going up, one. And for them, every time the market goes up, they don't have to take as much of a loss. Or they were bottom picking, or they were looking for the first wave up. They were looking for the bounce up, kind of like the same thing we saw on C. Or short sellers just didn't show up. And why didn't short sellers show up? Because there was so much information coming out of the administration. There were so many rule changes, and so many the rules of the games were not clear. Yes, you can have bonuses. The stimulus plan, the stimulus bill allowed for bonuses, and then all of a sudden the bonuses are getting taxed at 90%. There's all kinds of different rule changes all the time. And that's why short seller says, you know what, I don't want to take the risk. I don't want to jump in with a short on the short side. As long as the market is going up, I'm going to stay out. So that's the reason why we saw no waves and just one thing up. We found out that the Fed is stepping into the market and is buying securities. The Fed is going to print out on Wednesday. The Federal Reserve Board came out and they said they're going to print out almost $1 trillion worth of paper, and they're going to go into the market and they're going to buy their own debt in the free market. Now, first of all, Fed printing out that much money, I have a problem with it. Second of all, them going into the free market and buying their own debt with the money that they printed out, to me, it doesn't make any sense. And third, the fact that they're actually into the market, into the free market, and they're buying. So, do you think they're buying stocks? Is the Fed supporting stocks by buying S&P 500 futures? Who knows? There's been stranger things out there. If they're buying treasuries, why aren't they buying S&P 500 futures? Anyway, this is just my little conspiracy theory. By the way, I'm not the only one that thinks that way. There were quite a few guests on CNBC before that said that they can actually see that the Fed's stepping in and buying. Anyway, beyond that. So what's going to happen now? Well, S&P 500 came to the 800, saw its own shadow and turned around. We could come back and test these lows. Why am I saying that? Let me show you. Here's a daily chart of the S&P 500. Notice the red is the 200-day moving average. The blue is the 50-day, and the 21 is the yellow. And notice how they are one on top of the other. That means that we are still in a very strong downtrend. There is absolutely no higher bottom. There is no bottoming pattern whatsoever. This was just a bounce. And this Citibank is basically the proof of what happened there. So what's going to happen? Where are we going to go? Well, there are a couple of things. If they're printing out that much money, they're trying to reflate the market. They're trying to increase inflation. They're trying to increase inflation because by increasing inflation, first of all, our national debt doesn't cost us as much. That's one thing. And second of all, maybe housing prices will come back up. Who knows if we're inflating it? I think it's going to be a disaster. I don't believe in it. I don't have any faith in that move. I think the Fed had our rates are at half a point. They ran out of tools, ran out of weapons, and they kind of threw a Hail Mary with this purchase in the free market of treasuries. So the market liked it at first, and then it gave it all back on Thursday and then on Friday. So I think we're going to come back down. How are you going to make money off of it? How are you going to protect your own assets? And this is the bottom line right now, guys, is you have to protect your own assets. You have to move your assets from things that are going to lose money and put your assets in things that are going to make money. Well, a couple of things. I'm going to show you some sectors. There's the spiders. There's the financials, and you can see the financials are just taking a beating. There's the energy. And you can see that energy did not suffer quite as much. As a matter of fact, you can see that the moving averages are pretty close to one another. This is the housing, and housing is really beat up and looks like it's giving up even more. This is the industrial spider fund, and you can see that the industrials are just getting beat up, and it's a very strong downtrend with lots of overhead supply. This is the materials, and the materials are not quite as bad. Look at the technology. Technology is not quite as bad. Technology is not really suffering from this downtrend quite as much as the other ones. This one is a consumer discretionary. You can see the consumer discretionary is suffering, and is suffering quite badly. But you can see that all of them are basically in downtrends. This is the utilities, and you can see utilities really in a very strong downtrend and looks very, very weak. This one is the S&P retail, and you can see retail is actually doing better. Why is it doing better? Maybe because it was discounted, maybe because people are starting to spend again, maybe because people are just spending on different things, such as Walmart. Healthcare is suffering quite a bit. Who knows what's coming down the bend? Consumer staples coming down. Biotech coming down pretty hard. This one is oil and gas equipment. This is something that we're going to have to pay attention to. If we are going back into inflation, and we talk about serious inflation, what's going to go up? Oil and gold, materials, and things along those lines. So that's why we're looking at these. Last but not least, and this is very interesting to me, and this is the S&P semiconductor. So the semiconductors are actually starting to come off the bottom. Remember, this was out of favor sector for so long that it might be good again. A couple of things that I'm looking at personally is the USO, for example. USO is the United States Oil Fund, and it used to be up here. Now it's down here, and it's making higher bottoms. That means that this one could be good for the long term. And if it's sitting at 30 and it only goes up to 40, that's 33% return. If it goes up to 60, it doubles. If it goes back up to old levels, it quadruples. So there's quite a bit of room right here, and that's something that we'll be looking to time the entry on. I want to show you. This is oil, crude oil, and you can see the crude oil is coming off the bottom, and this is very dangerous for the United States. We could go back up to those levels, and again, that's because of the reflation trade. Trades that are working for us right now, they're not clean, but they're working. For example, CME. CME is an exchange that worked out pretty well for us. CRZ oil and oil and gas exploration. It's too close to even see. There's 60 minutes. I went from 874 up to 974 in one day, which was really great for us. Humana did very well from 2203 all the way up. Those are just a couple of what we traded. Not clean trading. It was rough trading, a market that does not pull back. But the trades were there, and those that persevered actually did very well when the market bounced. What's going to happen from here? I think we're going to come back down, so we're starting to look again at the short side. As long as we're below the 800 level on the S&P 500, there's the S&P 500, we are looking at the short side. Anyway, have a great week, and I'll talk to you next week. Take care.